Inflation was beaten down a little more last month, with many price increases tamed and some prices actually falling. Jeannie Lee joins us now with the details. So Jeannie, tell us, where are we seeing some of that relief?
Quite a lot of places, actually. And for a while, of course, some of these prices that we go and have to pay at the stores were ballooning, and now they're ballooning less, and in some cases, as you say, they're actually falling. So the overall rate of inflation also falling to 2.8%. That's the second month in a row where the overall inflation rate is under 3%, which is where the Bank of Canada wants it to be. Now, the other rates that the Bank of Canada tends to focus on would be the core rates of inflation, various measures that it looks at that count or discount certain things. At any rate, those rates are also down. So we can see definitely progress in the war against inflation piling up month by month. So here are some specifics from last month's report. You had cell phone plans and internet plans. We heard from the telco chiefs yesterday about how these prices are falling dramatically, and there is further proof in this report that they are. Cell phone plans, for example, down by more than 26% in the past year. Now, groceries, we still see food inflation, but very tame, relatively speaking. 2.4% is the rate of inflation for groceries. Big drop from the month before and way down from the 9, 10, 11% inflation that we saw at the grocery stores for a while there. And specifically, fruit, processed meat, those would be your deli slices, fish, all down a little bit in terms of price. We're talking about prices falling and not actually just inflation falling. The other thing is alcohol, clothing, tobacco all cost less. But we should say that gasoline did cost more from a year earlier, and those pesky rent and mortgage interest costs are still spiking. But overall, we can say that there is progress on that inflation rate for sure.
Okay, so some good news then for shoppers, but what about for borrowers? What does all of this mean for them?
And that has been the big question, since a lot of people are holding big debts and at rates that were quite a bit higher after the great rate spike of 2022 into 2023. So, what all this is showing, the fact that the inflation rate is down, is that they are working to squelch demand, but also hurting the economy. We know that the growth in the economy has been at a standstill. So here are some various reactions out there. From the National Bank, today's data reflects that cooling of the economy. Over the last 6 quarters, there is a risk that the bank will inflict too much damage with an overly restrictive monetary policy. So a lot of people predicting that rates will go down very soon. Here's another viewpoint from Manulife. Big miss on that core rate of inflation. This cements the odds of a rate cut in June. So there's a call that's very common, the June reduction in interest rates. And from Claire Fan of RBC, just a final word to Claire, we expect a persistently soft economic backdrop to further slow inflation, allowing the Bank of Canada to start lowering interest rates around mid-year. So June and July, those are the popular predictions for the start of rate cuts. Hillary?
Okay, we shall see. Thanks for this, Jeannie.
You're welcome.